Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the latest cues from the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are passing in trade today. We'll get you expert views to find out where exactly can money be made in this market and also where should your focus be. First up, a quick check on how the benchmarks, the Nifty and the Sensex are doing at this point in time. Well, they've improved from the day's low level, a 140-point surge currently being seen on the Sensex. 66,373. Green also being seen on the Nifty. 19,777 is the current level. It's 33 points higher in trade, about 0.2% higher for the Nifty and the Sensex right now. We're also seeing incremental buying now coming in from a whole lot of sectors in trade as well. The small caps have picked up in trade, a 0.25% surge for this one, but it's clearly a day that belongs to the banks. The PSU Banks are the top movers today with almost a 4% surge nearing its all-time high levels, and you can see 52.25 currently on the Nifty PSU Banking Index. It's at the top point of the day, followed by the private banks and then the financial services. The Nifty Bank is up by 0.7%. So that is where all the action is. What is also interesting is that the Nifty IT has also picked up pace. So is the auto space, the oil and gas space, the realty space as well. All of them are seeing some kind of a move coming in on the markets. On the top movers, as far as the Nifty 50 is concerned, you do see Indus Bank as the top mover of the day, 3% higher, followed by Maruti Suzuki, that's now over 2% higher in trade. Tech Mahindra follows, State Bank of India, M&M, Coal India, HDFC Life and Bajaj Finserv. These are the top gainers as far as the Nifty is concerned. On the losing side, however, you do have some stocks that are still under the pressure in trade today. Dr. Reddy's, for example, Power Grid, Wipro, these are the stocks that are still sluggish in trade. About 2% of a fall can be seen for these ones. Cipla, Ultratech and Sun Pharma, the other stocks that are down by over a percent. Time to welcome our guest on the show. Abhishek Basu Malik joins in, the founder of IntelSense Capital. Welcome, Abhishek, and thank you so much for taking the time out for this discussion. Your take on the overall market setup. We've seen this truncated week, seeing large parts of day's correction happening on the Nifty index. We're down about 2.2% or so from the September 15 highs that we had seen. What do you make of these corrections right now and volatile moves that we are seeing in the markets, or do you anticipate deeper correction really happening?
First of all, good afternoon to you and all your viewers. I think the last time we spoke, I was talking about the markets getting into a range, especially after it hits an all-time high.
Yeah.
And that's precisely what has happened. Very difficult to take a call in terms of whether it's going to fall further or not, or whether a large part of the correction is already done. Now, what is interesting for me, just from an observation perspective, is Nifty has been pretty weak over the last 2-3 days, and today morning also, it sort of started weak, even with the kind of positive news in terms of India's inclusion in the bond index. That's a very, very strong structural change that is going to impact overall numbers for the country as well as for borrowing rates, etc. So even with that kind of a news flow, if the markets are struggling, it means that the undertone of the market is not very strong, and there is a possibility that we will sort of languish in this kind of a zone for some more time.
Okay.
Global cues are also not strong. We are seeing crude going up constantly. A lot of noise around crude. A lot of news flow. Crude is something which is obviously very touchy for a country like India. And US Fed, they did what they were expected to do to continue with the current stance. Now, what that sort of means is that the pickup in IT, which is probably our counterbalance in terms of our exports, that is going to take probably a bit longer for things to get back to previous kind of levels from a business perspective. So overall, my sense is next few weeks, months, maybe we will trade around this range.
Okay, so the markets could be range bound, but since you talked about the JP Morgan's inclusion of India in the government bond index in the emerging markets, of course, there is a whole lot of expectation that perhaps billions of dollars may be coming towards Indian markets, and perhaps that has led to the sentiment approval or a relief rally of sort in the markets today. But the concentration largely is the banks, and in that also the PSU banks. Do you think there is a direct connect between JP Morgan's inclusion of India and why the banks are suddenly taking this in their stride? And could you explain that?
See, very simple. If you, I am not an expert on the bond market or bonds, but what I understand from, basic thing is that the moment you have bonds getting included in a large global index, what happens is a lot of capital is going to flow into it, right? So a lot of foreign capital is going to come and buy bonds in India. Now, when you are supposed to, or you're forced to buy something, the demand goes up, and obviously the price goes up. What that will imply in very common sense terms is Indian entities will be able to borrow at lower rates, right? Obviously, the bigger beneficiaries will be people who have sovereign backing. So maybe the PSU banks, maybe some of these even the government of India paper. PSU, other entities, even private entities, they will find a lot more. It would be easier for them to borrow capital at lower rates. So obviously, the interest rate is going to go down over the next, say, 1 year, or it actually gets implemented from next year, June onwards. So it is expected that next year onwards, this is going to be a structural change in terms of money capital flowing in. And of course, money flowing in form of dollars is going to help the rupee as well. So
Okay,
over a long term, this is a very, very structural move
sure.
from the Indian economy perspective.
Right, but let's focus a little bit more on the PSU banks and the rally we are seeing in the banks overall as well. The PSU banks, remember all the viewers, for you, in the last 12 months, we've seen the PSU banks really gain. This has really helped the index of PSU banks rally about 60-61% as against the 12% surge seen in the Nifty and a 10% surge seen on the Nifty Bank Index. In today's trading session, of course, all the 12 constituents of the Nifty PSU Bank Index are seen jumping, and we've seen at least Canara Bank, Union Bank, Indian Bank also hit their 52-week high levels today as of now. I wanted to ask you, Mr. Basu Malik, the valuations of these smaller banks, the second rung PSU banks, that is being now seen as a more attractive zone. We've already seen, of course, SBI, PNB, Bank of Baroda, they have been on an upward run. But the IOB, Indian Bank, Union Bank, Bank of Maharashtra, these stocks have also started to perform, to see this catch-up rally take place. How are you looking at this entire space, and where would you be more bullish on right now as far as the PSU banks go?
See, the entire space, mostly it's not overvalued as such. But if you look at, say, a state bank, which is, perhaps the largest bank in, not perhaps, it is the largest bank. It's huge in terms of whatever parameter you look at it. It is still available at a price to book less than 1.5 roughly.
Okay,
Now,
okay,
that is, true for most of these larger PSU banks. Some of the smaller PSU banks, in fact, have run up a lot more sharply than compared to these larger banks. When you are looking at banks, what you really need to look at is the quality of lending, their history, how management has been able to sort of steer clear of bad loans, etc. So I would, be more comfortable with, say, an SBI or a Bank
okay,
of Baroda than, and in the smaller rung, maybe a Canara Bank or an Union Bank, than some of the other, very small players uh, who have a track record of sort of messing up uh, in most of the cycles.
okay. So in the larger PSU banks, SBI, BOB, and in the smaller rung, Canara Bank and Indian Bank would be your preference right there. Let's take this discussion forward now to the private banking space. We do know that HDFC Bank, ICICI Bank, they have been, the draggers for the Nifty Bank all across this week. HDFC Bank has been a big underperformer this entire year. We've now seen fresh triggers emerging from the recent analyst meet that took place, and thereafter we saw the brokerage houses further slashing their target prices and downgrading HDFC Bank as well. But in hindsight, do you think HDFC Bank at under 1550 could be a great buying opportunity for all those investors looking at sound balance sheet, large banks which will definitely carry the weight that they do in the Indian stock markets for even years to come, 5 years, 10 years perspective? How would you tell an average Indian investor to strategize their moves on these big banks, HDFC, ICICI, Axis, Kotak?
I would right now probably prefer ICICI or an Axis over HDFC and Kotak. I think HDFC needs some more time to get over the management transition, get over the merger with HDFC, and get its act together, get growth back in place. In terms of Kotak, I think they are right now just getting into the management transition. Obviously, it will take some time for things to get into shape. And as investors, we also need to understand what is the direction that the new management is going to take in Kotak. Whereas in ICICI and Axis, we know the management has been there in place for a while, and they're doing a pretty good job. They've cleaned up the balance sheet. Things are looking much better. So in the larger private bank space, these would be much better, more conservative plays, in my opinion.
Okay, understood that. So, since we have been saying this kind of mild correction over this last week, and you also believe that for some more time to come, we may be looking at a range-bound trade in the market since we've already seen a run-up. In case a little deeper correction really comes in, do you have some sectors or stocks in the mind for which you'll have your shopping basket ready?
I am not very, I think the shopping basket will not really change. It's going to be the same sort of, sectors, industries, which we've always spoken about, at least in the last 1 year. Things like pharma is looking good. Capital goods, engineering, that space looks very interesting. Railways continues to do well. I think a lot of the valuation froth is going to going away from some of these railway stocks, some of these defense stocks with this correction that's happening. So that's a very good place to be in. In fact, I'm beginning to like the insurance sector once again. So that's another place, which nobody is talking about, but seems to be sort of, business-wise, the business thing seems to be bottoming out, and things could get better from here.
Okay, so pharma and the insurance space, the two spaces that you are now turning bullish on. Since you talked about pharma, there is news flow on Glenmark Pharma with Nirma coming in and Glenmark Life Sciences. How are you looking at the news development, and what would you suggest investors to do here?
I have no clue. I don't track both these companies, so cannot comment.
Okay. In the pharma pack again, I've asked you this question before as well, but I wanted to ask you again. We've seen, the Dr. Reddy's, Cipla, Sun Pharma on the move again, but we're also seeing the diagnostic plays, the hospital names also come up pretty well. Which segment of the pharma pack would you be more bullish on now?
See, I mean, I am more probably I'm across the board. I think I'll be bullish, but pharma is a sector or an industry which is very, very company specific. So every company does things slightly differently. There are companies which are, very heavy on US exports. Some are completely domestic. Some have focus only on certain therapeutics. So you have to take your call. Some are API plays. So you need to be very stock specific when you're dealing with pharma. You cannot paint every company with the same brush. So, I am more focused on slightly heavier domestic plays. I think India, seeing the demographic that we have, India-focused pharma companies are likely to do pretty well.
Okay, I'll also ask you about the auto space, especially the largest car maker, Maruti Suzuki. We are seeing it as one of the top gainers today. It's shot up 2.5%. Brokerage houses reports are very, very bullish on the stock as well. Today it's trading around 10,526, and the brokerage house reports from Morgan Stanley, suggest a target price of 11,963 coming in. I mean, I remember this stock had slipped to almost less than half of the current price during COVID-19 crash, when we had seen that if there have been investors who were lucky enough to invest at that point in time, they must be definitely celebrating the doubling of their wealth at this point in time. But Maruti Suzuki structurally also has been talking about how they want to invest big, create big capacities over the long run as well. They are poised towards gaining the top market share in the SUV market space as well. So they are gearing to grab it all once again and grab their own top position, or wherever they were languishing in the earlier years as well. I just want to ask you, from a perspective of a long-term investor, at 10,520, this would look like a very expensive stock for a whole lot of investors. But do you see this stock really doubling from here as well, 20,000, 25,000? Is that kind of a level that one can foresee in about 10 years' time, maybe?
Very difficult to say. I mean, I am probably more bullish on the short to medium term for the next 1, 2 years for Maruti
Okay.
than having a 10-year view. And I'll maybe, explain it in a few sentences.
Sure.
One is, see, what the major problem with Maruti was that uh, their product basket did not really have SUVs, and that is the segment that has grown the most for the entire market for the last few years. Now, Maruti is correcting that and getting into the SUV space with a lot of launches that they're doing, and the auto cycle has also picked up. So, in both in conjunction, they are looked to they're poised to do well over the next 1 to 2 years. Now, the challenge with Maruti is their R&D is extremely suspect. They don't have an independent R&D. They are dependent on Suzuki, and Suzuki or themselves don't have a very strong R&D. They are dependent in turn with Toyota. Now, Toyota has been an extreme laggard in terms of transitioning onto EV. And if we have to believe that EV is going to be the bigger play over the next 10 years, for example, then you would have to question where would Maruti fit into that, right? Because there are other companies in India which are going to come out with a lot of EVs, say over the next 3 to 5 years. You will see a lot of competition coming in from, Tata Motors is obviously the market leader now. You'll see, Volkswagen coming in, Kia coming in, Hyundai coming in with their EV offerings. And Maruti, I don't see a product line even globally where they have succeeded in EV. So that is a question mark in my mind for Maruti over the next, beyond the next 2 to 3 years.
Okay, understood that. Well, many thanks, Mr. Basu Malik, then for being with us on the show and discussing all these insights with all our viewers again. The market's picking up strength, about 170 points higher on the Sensex at 66,406, 19,789 currently for the Nifty as well. About 3/10 of a high percentage higher points for the Sensex right now, but we'll keep an eye out on how the markets really move in the second half of the trading session. We do have about 2.5 hours still remaining for the markets to shut shop, and it looks like the bulls are not yet willing to give it all up to the bears in today's trading session. Again, the tug of war continues. What you should also get ready is for our special Market Masters series coming up on the Monday as well. That's 25th of September, where you can get to send in your queries for Saurabh Mukherjee and of Marcellus Investments, and where you can send us your questions on 7303080488, and this WhatsApp number. You can also send us your queries all across our social media platforms, and we will take all of these questions live on Monday.
The Investigation Division of the Central Board of Indirect Tax